What's up guys, Johan Lorenzo here. In today's video, we're gonna talk about the #1 payment processing company in the world. Over the last 10 years, this company has an average yearly dividend growth rate of 19%. Being the most dominant player in their industry, I can see this company aggressively growing their dividend over the next decade. And that's something I wanna be a part of. And maybe you do too. So without further ado, let's get into the video. Before we get started, if you enjoy this type of content, please give this video a big thumbs up and subscribe to the channel if you haven't. That way we can continue growing this community and put more people on the path to financial freedom. Thank you guys for doing that. I really do appreciate it. Now we can get down to business. The dividend stock we are talking about here today is Visa, ticker symbol V.
Visa is a payments technology company that facilitates commerce around the world. Whether you are making a purchase, sending money to a friend, or part of a business moving money to another business. Visa pioneered the electronic payments business more than 60 years ago, envisioning a world in which paying for something could be translated into electrons and photons that move across the globe at the speed of light.
The consumer may access an infinite range of goods and services whenever he chooses, wherever he may be.
Today, there are more than 3 billion Visa accounts around the world, in more than 200 countries and territories. During fiscal year 2019, more than 200 billion payments and cash transactions were made with the Visa brand, representing more than 11 trillion in payments and cash volume, from the largest cities to remote communities across the globe. Each transaction made on the Visa network represents a packet of data that moves across a massive telecommunications network, more than 10 million miles in length end to end. The network is made up of fiber, Ethernet, wireless, satellite, and virtual connections, linking consumers, businesses, governments, and financial institutions.
Visa is not a financial institution. They are a payment network. And the way that they earn their revenue is by facilitating money movement and offering services to their clients. I guess you can say Visa is basically the middleman between financial institutions and merchants. And they make a profit from those transactions. And the best part about it all is there are millions of transactions happening on a daily basis. With more and more people around the world adapting to digital payments and getting away from carrying cash, Visa still has a lot more to grow. Taking a look at Visa over the last 5 years, they've beat the overall market pretty good. Visa has a 5-year return of 129.2%. The overall market returned 74.5% within the same time frame. And when looking at the 10-year chart, the beating gets even worse. Visa has a 10-year return of 594%, with the overall market coming in at 197% return. As a dividend investor, we sometimes get sucked into the dividend yield, and we let that encourage us or discourage us from investing in a company. That's not always the best thing to do because you can fall into a dividend trap or you can miss out on a great opportunity, like this one with Visa. Although Visa does have a pretty low dividend yield, it appears their dividend yield has gotten on an Elon Musk SpaceX rocket because they are growing at a rapid, and I mean very rapid pace. And it doesn't look like they're gonna stop anytime soon either. Right now, the company has a dividend yield of about 0.73%, but don't let that cloud your judgment. They're growing their dividend at a very fast rate. And if you plan on being a long-term investor in this company, you can possibly end up with a 6, 7, or maybe even 8% yield. And this is all just from simply buying and holding the shares for the next few years. Visa right now has a very low payout ratio of just 22%, so there's no need to worry about the future consistency of their dividend payments. They've got 14 consecutive years under their belt of growing and paying a dividend. They're in a very comfortable position when it comes to paying out a dividend to their investors. Simply Safe Dividend gives them a Dividend Safety score of 99%. Their dividend payments are currently 38 cents every quarter, and they pay you in the months of March, June, September, and December. At the moment, their dividend yield is 15% above their 5-year average, and this can be an indicator that the stock is undervalued. I personally would like to see the stock in the $190 range, which is basically their major support level, and then I would probably buy a couple shares there. But for now, I'm going to keep them on my watch list and I'm going to have a close eye on them. Going over to Seeking Alpha here, we can see the stock has had a 52-week high above $252. Their current P/E ratio is around 34, and it's actually improved quite a bit, but the stock is still a little on the expensive side. But with that said, if you want to buy it now, you're still owning a super solid company that's going to be around for the next several decades. If you don't want to time the market and just want to dollar cost average yourself into a position here, that sounds like a plan to me. I personally might end up doing the same thing because we all know time in the market beats timing the market. And right now, regardless of how you look at it, the stock has had a steep pullback from its all-time highs, and buying the dip here would make sense. And adding to that, the company delivered great first quarter earnings. And they brought in over $7 billion in the first quarter, and they grew by 23.9% year over year, beating their earnings estimate by $270 million. They had their payments volume increase by 20% in a 3-month span. Visa also had a total of 47.6 billion transactions in the same 3-month span. The company's share buyback is amazing. Over the last 10 years, Visa has been buying back a ton of shares. So if you're an investor in the company, your ownership in the company is going up without you ever having to do anything. Every time the company buys back its shares, the relative value of each share increases. In 2021, Visa bought back $4.1 billion worth of stock. That is a huge jump from their previous year in 2020, where they bought back roughly $1.8 billion. And a quick peek at what they dished out in the form of a dividend comes in at $809 million. Once again, future dividend payments are looking pretty reliable. Their earnings per share is scaling up nicely, and as you can see here, they just had their best year ever. They've also got amazing free cash flow on hand, the most they've had in the last 10 years. Their total sales have also been consistently growing and improving over the last 10 years. Aside from the hiccup there in 2020 due to the Rona situation, the company has grown its sales every single year. In a nutshell, Visa is a very strong company, and although they seem a little pricey at the current moment with a PE ratio of 34, the strength of their balance sheet says it all. This company has a ton of cash on hand, enough to wipe out their debt if they wanted to. And sometimes that luxury comes with a higher ticket to pay. And that's just what it is. Well, that's all for today, folks. Don't forget to smash the thumbs up button. Don't forget to subscribe to the channel. If you have any comments, questions, or concerns, leave them down in the comments below. I will get back to each and every single one of you. As always, until next time, peace.